afternoon, everybody. This is Trey getting in touch with you from Japan. Today is a beautiful day in the neighborhood, and it just got even more beautiful because you're here with me. Alright, on to today's topic, Target. We looked at Walmart recently, and I decided to kind of look into Target, and I will look into Costco as well, just because I've been curious about them. How do they compare? How do they compete? What are their strengths and weaknesses? So in today's video, we're going to take a little bit of a look into Target. Target has long positioned itself as like a slightly more premium Walmart, offering similar types of groceries, accessories, furniture, electronics, clothing, and things like that. They used to, at least, when I lived in the US, like, 10, 15 years ago, they used to kind of say, we're only like 5 to 7% more expensive than Walmart, but you get great customer service. You get actual like floors and, friendly return policy and things like that. So that used to be their sales point. Because I haven't been there in a while, I wanted to look into it and learn a little bit more about that. Growing up in my neighborhood, it was always kind of like, ew, Walmart? You go to Walmart? That's nasty kind of thing. We go to Target kind of thing, And so I wanted to look in and see how they stack up against each other. So I'm going to go into a little bit more like granular detail when I compare these companies more directly, but I will be mentioning Walmart because it's kind of like, it's a direct competitor. One of Walmart's strengths is that they're just so phenomenally big that they can go in and basically push around any supplier to get lower and lower prices. Target doesn't have anywhere near that buying power. Analysts and big time investors, Warren Buffett often talks about this, is that you want to be looking at companies that have a wide moat. And what that means is, like, imagine you have a castle with a huge river encircling it, a moat. If that moat is really big, then you're kind of like safe and protected. If that moat is really small or non-existent, anytime enemies can come in and conquer you. And Walmart is generally considered to have a wide moat and therefore very safe and very protected. And Target is generally considered to be no moat or like a very little moat. They try to boost their moat or boost their brand by providing custom brands. They have their own exclusive brand partnerships. They're starting to offer more rewards programs. Their most popular one recently is called Target Circles, which offers a 1% discount as well as a say in how Target uses their philanthropic, as well as a say in Target's philanthropic endeavors. That is an attempt to breed loyalty to Target. Generally speaking, customers, when they're looking for, let's say, Old Spice deodorant, they don't really care which store they're going to. So having those kinds of brands exclusive to your store can really help a company establish a little bit of that moatiness. These exclusive brands and in-store brands make up about 33% of Target's sales, which is quite significant. Here are a bunch more facts that you might find interesting. I found them interesting, and they gave me a better idea of Target's position in the market. Last year, Target ranked as the 8th largest retailer in America at $77 billion a year in sales. I mentioned earlier that 33% of their sales come from their own brands and exclusive brands. When it comes to grocery and food sales, that makes up about 20% of their sales overall. In the Walmart video recently, I mentioned how e-commerce has been a huge source of growth for them. Even more so in Target's case. E-commerce jumped 141% compared to the same period last year, first quarter, all the way up to 15% of their overall sales. For that same period, in-store sales only grew 1%. This factor alone suggests that Target's switch over to being it's called an omni-channel retailer, which means they're online, you can go in store, you can order online and pick it up in store, or they can ship it to your house. They're kind of like in all of the channels. This suggests that Target is doing a really good job of making that switch. Typical brick and mortar retailers with the onslaught of Amazon are having to adjust, and they're having to capitalize on all of their locations around the country versus Amazon, who just has like huge distribution centers a few places around the country. A few years ago, Target acquired a company called Shipt, which turned out to be a really good investment for them, and it's helping them make this shift. And as a result, they're able to offer same-day delivery on a number of products. In addition to that, Ordering online and then picking it up in the store is also becoming somewhat popular. I would imagine if I was living in the States, I think I would use this option quite a lot if I didn't want to have to wait for a product. If I need it right now, order it online, just drive over, pick it up, be in and be out, boom, boom, boom. You don't have to worry about too many, masks or no masks or that guy's coughing or, stuff like that, or even, security things or safety things. You can just be in and out, boom, you're done. In 2015, Target sold off their pharmacy operations to CVS for $1.9 billion. That seems to have been a good choice for them. This is not so well known, but in 2015, Target had attempted a dramatic expansion north of the border into Canada, my home country. I grew up in Toronto. If you're from Toronto, leave a comment below, say what's up. It would be dope to see if I had any Canadian viewers. But anyways, this led to a dramatic pullout and a big loss, obviously, if you're like leasing a bunch of big shops and stuff like that. So that's a little bit of background on the company. If you're enjoying the video so far, please leave a like below. If you want to see subsequent videos on these comparisons, or if you have other recommendations for things you would like me to look into, stocks or companies to look into, please leave a comment below. Anyways, how has Target been faring during this Corona period? One of the things the CEO came out and said was that $1,200 Trump buck stimulus that we all got ended up being a huge boon to their sales in the first quarter. We saw a huge uptick in sales kind of going towards the end of the first quarter there, which helped a lot. Comparing the same quarter last year, sales were up more than 10%, which is huge for a really big retailer like Target. On that same vein, obviously food and staples like that have gone up. People still need to eat. But on the other side of the coin, apparel and accessories and numerous of their other categories have plummeted steeply, probably because a lot of people aren't really certain where their next paycheck is going to be coming from. So just keeping money for the essentials. Another interesting note on the topic of food, for example, Walmart uses food, really cheap prices, as a draw to bring people in to sell them other higher margin items. Target, on the other hand, doesn't have that pricing leverage, so they can't offer prices as aggressively low as Walmart. Therefore, grocery sales only make up about 20% of their sales. So that's good on one hand because 80% of their sales are non-food, which are higher profit. But one of the interesting things about grocery shopping is that people tend to become loyal to grocery stores. And if you're loyal to Walmart's grocery store, you're going to go there and then also buy all your other stuff. So if Target could raise the percentage of people that are going there primarily for groceries first and boost that loyalty, that could help them also channel people into other more profitable departments. So going back to that 10% sales bump we've seen since the first quarter, things have tapered off a little bit since then, and we're kind of like starting to not see a lot of change compared to previous years besides their online department, and has become about 15% of their entire sales overall. It looks kind of like we shouldn't expect Target to be growing super a lot. Compared to competitors like Amazon and Walmart, they don't have that leverage. They don't have that moat. So there's kind of always going to be competitors stepping in on their territory in various different departments or various different offerings. They do have a strong and growing stronger online presence, but they're going to have to be competing against Walmart and Amazon in those arenas. They do offer exclusive brands, but again, those aren't a huge draw to keep people loyal only to Target kind of thing. And so as the retail environment is making this dramatic shift, Target seems to be doing a fine job of making the shift to online omnichannel. But at the same time, in-store retail sales aren't, it's not going to be changing too much in the coming years. I wouldn't be surprised if a lot of this online shopping is here to stay permanently in the coming years. I did a lot of research into looking at different analysts' opinions. That being said, I don't take analysts' opinions as gospel. I take them with a grain of salt. But generally speaking, people aren't expecting Target to be like a really high growth company. Kind of like low single digit growth for the coming years for a very long time. Kind of, 2, 3, 4% growth. I want to share a few of the vital stats, as I usually do, just so you can get a feel for how the stock is doing. Current price is about $120, 52-week range of $80 up to $130. So we're sitting on the higher end of that range. EPS last quarter was $5.38 with a P/E ratio of just over 22. the forward PE ratio of 17.5. They do offer a quarterly dividend of 68 cents, which is an annual dividend of $2.72, which adds up to be an annual dividend yield of 2.29%, which isn't bad. And I think that might be one of the most appealing factors about Target as a stock right now. That being said, on the other hand, their 3-year dividend growth rate is only 3.9% versus the S&P 500's average of 13%. On the other hand, their return on assets, almost double the S&P 500 average, 6.5% versus 3.3%. And return on equity is also almost double the S&P 500 average of almost 25% to 12.5%. Their long-term debt per capital is 0.56 versus an S&P 500 average of 0.44. So nothing like super alarming going on there. So who do I recommend this Target stock for? It's really interesting looking around at a lot of the analysts and a lot of the different brokerages who recommends what and things like that. A lot of the brokerages were like, yeah, it still has a lot of room for growth. Hurry up and buy it now, kind of thing. And I was like, what is so appealing about this? Like, yeah, their online portion is growing, and they have a slightly nicer dividend than other retailers. And I looked into it, and I figured out that 79% of Target's shares are held by institutions, which is fascinating because other competitors aren't nearly that high. I think part of that is due to the dividend yield and the solidity of the company. Management seems to be doing a good job, and they seem to be aware of all these challenges. For the position Target is in as a low moat retailer, they seem to be doing a good job, but 2 to 6% growth isn't hyper attractive for a lot of investors. But so when these institutions come in and just buy up huge amounts of stocks, not only does that keep the stock price up and stable, so you're not getting these huge dramatic spikes like you do with other companies, especially tech companies or things like that. With a dividend yield like this, above 2%, and with a well-known, pretty much trusted retail brand that not a lot of people have a lot of hatred for, unlike some of their competitors, I think that all kind of adds up to be kind of like, yeah, this would be good to have in our portfolio, if we're thinking about the next 20, 30, 40 years, preparing for retirement or preparing just for a little bit of dividend growth over the years. So I think that's my recommendation. If you're that kind of like slow and steady wins the race type investor, Target's kind of not a bad option. I'm not super in love with it as a stock. I'm not going to go out and buy any. It's not exciting enough for me. It's not world-changing enough for me. And I don't think there's enough capital appreciation capacity in the stock right now, kind of with the growth that we're seeing, as well as the turmoil we're seeing in the market. I would love to hear your thoughts about what you're planning to do with Target or, any of its competitors. Let me know if you have any thoughts, questions, concerns, comments, or if you'd like me to review a certain stock or sector, let me know. Looking forward to hearing from you. Looking forward to getting to know you. Thank you guys very much for your time, and have a great day.